What's up, studs, studettes, bulls, bears, hoes, bros, and gigolos? Hey, happy Monday. We got a nasty day in the market. Again, we got a lot to talk about. So, first of all, we need to figure out what the heck is going on. Then we need to figure out what's happening in the indexes, and then we'll go over the general watch list here, which will be short because everything's just moving together. So, first of all, by all intents and purposes, we are in bear market trading. Does not matter the definition of bear market. I consider bear market, anytime you get a spike up and it fades off, that's bear market trading, right? And we've been getting that for quite some time. The other thing, if you were looking at traditional metrics, we're under all the declining moving averages. 920, 50, 200's flat, but we're under everything, right? For me, if I'm under the 200-day moving average, I'm in a bear market anyways. But the main thing is, as short-term traders, when you see this, that's bear market trading, right? When you see the QQQs open up 1.5% or 1.2%, and you go red without even a thought, without even a second trading. When you repeatedly break the lows after lunch and then fade hard into close, that's margin call time, right? In the old days, like 2 p.m., the margin clerks would come off. You know, now we're happening at 1 o'clock or whatever, right? But it's the same theory. The margin clerks are coming for everybody's cookies in the afternoon, and we're getting that, okay? So that's 3 days in a row. The margin clerks come in with their bag full of candy, and they come and get your chatters, all right? So that's bear market trading. Bear market trading in a nutshell. So where do we go from here? Well, we're oversold, but we're not like that oversold. So what I mean by that is the T2108 is at 19. It's oversold. Anything under 20 is considered oversold. The hot bottoms are usually like a sub 10. Now you can get down to closer to 10, like we have in these kind of old school bottoms over here. You can get down to 10 in a day, right? From 19, like you can see here, you were at 23 and you got down to 16. You can get down there pretty much in a day. One big wipeout, I think you're there. Number of breakouts today, 171. Number of breakdowns, 584. It's a 3-to-1 breakdown to breakout ratio. That's pretty nasty too. So, you know, all across the board, we're in bear market trading for the most part, no matter how you define it. So what do we do? All right. So let me get back to my other chart. We're 578, 558. So we're 2 days worth of ATR from the 9 EMA. Ideally, I prefer like a 2.5 to 3. You don't have to necessarily be there, but that is probably the sweet spot, all right? So a gap down tomorrow, I think, would give us a potential reflex bounce for a period of time, maybe a day or two. And then we'd run into declining moving averages, whether it's here, 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 right? And, you know, then you probably roll back over. A lot of times people think this is a one-off thing because of Iran. It's not necessarily. The market sucked even before the Iran thing, right? Like the Iran thing just happened. Market has been shit for 6-7 months. So the structural part of what's driving the market down is still happening no matter what. But if we look at like maybe the tariff days where you got like that big kind of like orderly pullback and you think like, oh shit, you know, we're really oversold, blah, blah, blah. We were here. You know, 530, we dropped 100 points. And then you start to think it's the bottom. No, you run into your declining moving averages and then, right, you come back down. So you do, you know, oftentimes the first drift down doesn't lead to the long-term bottom. We may very well have to, right, gap down, pop up and grind into some EMAs, pop down and then do something like that. I think that could happen. Or you very well could, you know, just keep dripping down and then go down into the EMAs and then keep dripping down more. That's happened before too. So that is all part of the game. You know, right now we just got a bunch of 1 a.m. setups, and 1 a.m. setups are just awful. You know what I mean by the 1 a.m. setup, right? It's like you're at the bar, you're too afraid to talk to any of the hot chicks from 6 to 9 p.m. Then you get sauced up. You get the nerve at 10. You try to do it, you try to get it going with maybe a couple of divorcees, some biggins. Then you start getting your liquid courage. But then by that time, the bar is closing and everybody looks, right? Everything looks good. And I think, intraday we've seen a lot of 1 a.m. setups where it's like, I thought maybe I didn't end up taking the trade, but I thought like today in the morning, RKLB kind of tested into 200-day moving average, and then it started kind of testing out here. I'm like, no, come on. Let's not. The trend is down, even though you have supports. Like the trend is down by all things, and we're seeing like kind of a lot of that where it's like, you come in and you're like, wow, we're oversold, and you start to pop, and you kind of come up, and you're like, oh man, look like we keep testing these levels, and maybe something will happen, and you kind of squint your face, right? You close your eyes, and it's 1 a.m., right? And everything's looking somewhat better. But it ain't. So, moral of the story, if we gap up tomorrow, I think we just play it by ear. If we gap up tomorrow, this is what the play would be. Say we gap up tomorrow. This is the intraday chart over here. We gap up tomorrow, we spike up. We wait for the rug. You wait for the rug, and you kind of retest the lows or even break under, and then you get the bounce. That's only if you gap up. If you gap down and you get like, say down here, like you're in the 550, 540s, and you gap down, then we're looking to try to play the rebound fairly quickly. And then we probably sell into these, supply zones. So gap down, we probably start adding right away. If it gaps up, you got to wait for the trap and then let it pull back and retest, and then you go. All right, so that's usually kind of the plan on this. For all intents and purposes tomorrow, you need just like the most basic shit, right? So something like an RKLB that's just like kind of sitting here, right? On the 200-day moving average, you can see like it's just been kind of hanging out here at the 200-day moving average. That's probably your type of play, right? Microsoft, you got a big level here at 350. You can see you kind of go back quite some time. Let's see if we kind of come back close to 347, 350, I would do some calls on this. Like you go like even a month out, 10 points, 1 day's worth of ATR above wherever it is for your strike. I think they'll be fairly cheap. Microsoft's not like a huge mover, and that could pay some bills right there. Like if you get it, I think something like that is probably in the cards. MU is already, I think, is drifting in the after hours. So you're 314. You went from breakout, which is about almost $500, 450. You went from breakout to head and shoulders, basically, in like fucking 5 days, right? And that's what happens in bull markets, right? The news cycle will change fast. Now the smallest things will really impact this thing. Look at the rug on this thing. Dude, these things, you'd think like, oh, is that $500? Like it's at $300, it's a good deal. When it goes back all the way to where it started, right? Fucking $60. Then tell me if it's a good deal, right? But at that point, it would be like a nasty downtrend. But I think some of these may have more room to fall. Like you can see here, SanDisk. If we need a short, this thing got nailed today, right? Now look, it's an expensive stock. You can do this SNX. The range is fucking wild though, so just gotta be mindful of this. See how this like spikes up and then just like, dude, 18% today. Like, you probably break down all this. Like maybe you get sometimes these ETFs can have a major unwinds, right? And something breaks in this. If we need shorts, we go with SNDK. I think that's got room to fall, right? I think all of these are about to break down here. WDC, dude, I've been trading for a long time, and WDC has not moved in decades, literally. So when I started trading full time, I was like back here, and it's just been sitting there at this like 25 range for this whole time, right? So when you look at the weekly chart, you'd be like, oh, okay, maybe it does have some more room to go. So I think this has got a chance tomorrow. If you're just looking kind of the MU model, or right, then if it takes this out, I think we're good to go. Right, STX, they all have the same thing. This one's really thin, so just be mindful of this. Dude, we had this fucking monster cock short in. Sorry for swing. I don't know what's wrong with me. We had this monster short in AXTI today. It's got more room to fall. You know, it's probably comes down into the 40 to 30 to even lower. Remember, this thing was $2 just in the fall, right? So it's got tons of room to fall. So those are the shorts. If we need some longs, you know, what I want to do is, right, look for the kind of rubber bands where you're like at really, really oversold MSFT, right? RKLB. The stock AAOI is like a daily trader for us. It's in no man's land, but if it gaps down tomorrow, on average, that would be a decent spot if the market reverses. The reason is, so this day was its earnings day. So if you come back to the 50 and you come back to this earnings day, dude, that's a good spot, right? There's no getting around that. So that is maybe, but obviously this chart's fucked, right? So just be mindful of that. ENBS is sitting on the 200-day moving average. So if we get a bounce, ENBS at the 200, which has bounced off quite a few times here, 200, 200, just like RKLB. So that could be a spot. Otherwise, even better would be if it breaks under 200, hits the lower Bollinger Band. That'd give you a really good spot. You're at 2 stochastics on this. Is that 130? I think that's also potential play, right? So we'll keep this pretty simple today. I love you guys. Peace in the Middle East.